Welcome back to Market on Close. I'm Caroline Woods. It's time to talk a couple of big tech names moving in opposite directions today. Let's welcome in Dan Crowley, portfolio manager at Nightview Capital, for the conversation. Dan, thanks so much for joining us.
Thanks for having me, Caroline.
So I know you specifically are going to talk about Amazon and Tesla, but before we get to that, I'm curious, tech has been the worst performing sector in the S&P 500 so far in 2025, getting a nice little bounce for the most part today. Have you been buying the dip?
We've just been holding. We're generally speaking long-term investors, and I think it's a very difficult market to trade. I think if anyone said with any certainty that they would know what's going to happen with even in the next hour, that'd be tough. But yeah, there's obviously a lot of panic in the market, and a huge amount of it is focused on that uncertainty. But we certainly don't view this as any sort of death knell on high-quality businesses with strong technology-driven futures. So long-term, we remain confident.
So long-term remaining confident, and I understand not trading, but why not buying the dip right now? You could get, some of these names at 20, 30, 40% off from the highs.
Yeah, no, I certainly think that there's opportunities developing. With these tariffs, ultimately they will likely become a politically unpalatable issue once they start bleeding over into the real economy. So we are starting to see opportunities that were richly valued, especially in the quality sector, now coming down into an attractive area and into our buying zone, frankly.
Okay, so let's talk about a few of the names that I think you like. And the first is Amazon, almost 30% away from those all-time highs. Currently a winner today, up about 2% right now. Tell us your thoughts on Amazon.
Yeah, we think the future is incredibly bright for Amazon. We'll see on the tariff stuff as it gets sorted out. We think that, over any sort of reasonable time frame that they will do extremely well. There are moats that they built out, on retail where you can't even replicate them just with money. It took decades and billions of dollars to build on the AWS side. We continue to believe that real-world AI is going to power gains in AWS. And then we still think the advertising business is going to be a long-term moneymaker for them. So we see multiple avenues for them to gain success over the coming years.
We were just talking about the risk of a recession. How would you think of an Amazon if, in fact, we do enter a recession? Could it be a beneficiary and that people still need to order from Amazon even if the economy is sinking?
Yeah, I think the toothpaste is out of the tube in terms of e-commerce, and it's only going to grow over the years. So you could go down skew in terms of products, and there could be kind of a bit of a market shift. And even, there ultimately could be some kind of shift in global trade. But yeah, we see them continuing to remain strong, and as the bedrock of kind of e-commerce, and that itself growing over the years, even in a recession potentially.
Okay. We also saw Amazon put in a last-minute bid for TikTok, and we know that there's an extension in terms of the deadline there, so we'll see how that plays out. How likely of a scenario do you think that is, that Amazon would actually be able to acquire it, and what could that mean for business? Would it make you even more bullish?
Yeah, I think that there's a ton of synergy that they could incorporate into their business. And, most importantly, it's a bit of a sea change. The iRobot acquisition was blocked recently, and we're now seeing an M&A environment that I think benefits Amazon, not just in this case, but in other potential cases where they have been kind of blocked in the past few years.
Okay. All right. Another name on your radar is Tesla. We talked about that at the top of the show, that the biggest bull on Wall Street is getting less bullish. Dan Ives scaled his price target back to $315 a share from $550, which was formerly the highest on the street, and now it's actually below the median price target for Tesla of $317.50. Tesla's the worst performer of the Mag 7 so far this year. It's getting hit once again today. Shares are down about 4% right now. Can you make the case that you should hold on to Tesla?
Yeah, certainly. Again, there's an incredible amount of short-term noise, both around this company and at, the macro level. And a significant bulk of the Tesla valuation is in future cash flows. And so that has the potential to create short-term volatility, and generally does. But when we look at the opportunity in autonomous driving, their sensor suite, the portability of that, and the ultimate TAM that we see there, we think it's, tremendous in terms of its opportunity. We also, on the robotic side, see them as having extremely unique advantages. And we see both of these coming down to economic cost per unit and being a winner take most, if not a winner take all market. So we think the future remains incredibly bright, but there's certainly a lot of noise around it.
Do you maintain that bullishness if, in fact, Elon Musk sticks with Doge for longer than the 130-day kind of term?
Yeah, obviously that's a fluid situation too. And we've been invested in the company for a long time, and there have been fever pitches of kind of, let's say, excitement around the equity. We think that ultimately he will move on. I don't think that government has nearly the same level of passion over a long term as building rockets or robotics or autonomous cars. But when he is focused on an issue, he tends to give it his all. And that's what's going on right now. So yeah.
Okay, and not worried about, brands, the brand being tarnished because of the association with the Trump administration. In his note, Dan Ives did point to the fact that he thinks Tesla has lost or destroyed at least 10% of its future customer base globally based on what he calls self-created issues. And he says in certain areas like Europe, it might be even more like 20%.
Yeah, it's certainly been a headwind. But when we factor weight, basically where we attribute valuation to the company, we still obviously view it as an extremely compelling investment. So it's a reality. But we're trying to look at the whole picture here and the opportunity as a whole. And ultimately, we're moving more from B2C to more B2B products down the line. And I think that will be less of an issue going forward.
Okay, so Tesla share is down more than 50% from their all-time highs hit late last year. At what point are you comfortable buying shares versus just holding them?
Yeah, I mean, I think it's in an attractive buying range right now, obviously. But there could certainly be more volatility going forward. And because, again, as I alluded to, that a lot of these future cash flows are so heavily incorporated into the valuation, the short-term price movement is very difficult to predict. So I think you have to have a reasonably long time frame, if you were to pursue an investment.
Okay, Dan Crowley, portfolio manager, Nightview Capital. Thanks so much for sharing those picks.